So first of all, let me welcome you to today's session. We shall be able to do cost accumulation as our second topic. We shall be able to do it maybe in the next weeks. It's a bit wide topic. And mostly the cost accumulation normally discusses about inventory valuation. And in this case, we have to be checking on the method that we can be able to use for stock valuation. Later on, we'll be able to do some questions from our past papers that we are going to be tackling from our previous papers that have already been tested by CASNEP. But most important, you have to be understanding that the cost accumulation basically involves around inventory valuation, which basically is a periodic process of determining the quantity and the price of stock of items. We can be able to check on when we are doing stock valuation within the organization, we have to be arguing the fact that most of the organization normally tries to do valuation at the end of the period on a weekly basis. And in this aspect, we are going to be looking on what are we supposed to be doing on a weekly basis. And we normally want to trace whether there is any misappropriation of goods within the organization, which have already been taking place. But mostly, I know very well that you know what is an inventory, right? What is an inventory? And when you talk about inventory, we are looking on the investment. It is the investment of goods, right? It's the investment of goods. We normally look on the investment of goods, right? We can talk about work in progress and finished goods. Unfinished goods. So in this aspect, we have to be understanding why do we normally talk about inventory and why we normally have to be keeping it within the organization premises. As we move forward, when we are going to be checking on the inventory management, we are going to be understanding that there is an aspect whereby when an organization is dealing with overseas products, we normally want to hold, or we normally come up with a store within the organization to hold our products. Let me talk about the materials because basically it's all about production. And in this aspect, we normally look at, because already we are discussing about business transactions, we normally know very well that the stocks are normally purchased at different prices. So when you look on during the current periods, the goods are normally purchased at different prices due to the effects of inflation. And in this case, we are saying the items are normally mixed together in the store and is expected to be identified for the purpose of profit determination. So every time we are going to be keeping our inventory, we have to be knowing that the inventory that we purchased at the end of December, for example, let me talk about the materials for production. Those materials, if we have not used all of them, they might be coming with different prices compared to for the one that we have already purchased in January. But we are also keeping all of them in the store. So basically the reason is where we have to be doing, the most important aspect that we have to be checking on the systems of stock valuation is because of profit determination, because the prices of the purchase price of this commodity is different. So the cost of purchasing each item of inventory should be determined before the item is normally sold. The reason as to why we are doing so is because we don't want to be reporting some losses as an organization. So that is where we have to be having some ledger scorecards, which we are going to be using for profit determination. Now, when you look at it, it is not easy to identify individual item with its specific purchase prices. Because already when you look like something like hardware, if you are not doing bookkeeping, we might be having some scenarios whereby you are going to be experiencing some cases of identifying each individual. Let me talk about cement because as inventory is concerned, I normally see it. We normally incur different, or we normally have to use different prices and the items to be identified for the price in which we are going to be selling for. It has to be determined through proper bookkeeping. So we are saying it is therefore advisable to devise a method of determining the prices. And in this case, we have to be saying that we have two major systems of stock valuation. Two major systems of stock valuation. We normally have two major systems of stock valuation. Number one, we normally discuss about periodic stock valuation. Periodic stock valuation. Number two, we normally discuss about perpetual stock valuation. Perpetual stock valuation. Perpetual stock valuation. Now, let us look on the definition of each. When you look at it, we have to be understanding what is a periodic stock valuation. And most importantly, it's that you need just to be looking on the definition of it. And most importantly, the periodic is normally it is normally also known as the stock take method of valuation. Method of valuation. It is normally called the stock take method of valuation. And when you look on it, we have to be counting, checking, and verifying of the stock items at the end of the accounting period. But one of the key things that I normally look about these, because the account balances will only be determined during the stock taking period. So this may not be appropriate, by the way. It might be a good method to, since the stocks are normally misappropriated, the stocks which we misappropriate at the beginning of the accounting period, we can just be able to identify or to ascertain at the end of the accounting period. So that is where when we look on the periodic, it is normally done at the end of the accounting period. And we cannot be able to devise or to advise any organization to be able to use it. Because if, for example, there are some of the items which can be ascertained or they can be misappropriated at the end of during the accounting period, tunaweza too at the end of the accounting period. So that is where we are saying that we might be having a challenge for that. Now, let us look on the perpetual stock valuation, and it is normally called continuous. It is normally called continuous inventory system. It is normally called the continuous inventory system. And how does it work? And when you look on the perpetual, the transactions basically are normally recorded in a system so that after each and every accounting period, the records are normally updated. And this is what most of the organizations are using. When you go to the supermarkets, they cannot be able to account for all those products. But every time they sell, the system will be able to update itself. So that is where we are saying it is a continuous inventory system. Once we issue or once you sell a product, the system automatically gives you the balances. So what are some of the methods which we basically use under the perpetual stock valuation? And I can be able to say that one of the key problems with this method is that it has to be supported by a periodic system. And that is where you normally find most of the organization can decide to use something like QuickBooks, because already it is going to be supporting. That is where we normally talk of having an accounting system that already is going to be supporting the systems which are basically used mostly for stock valuations. We are saying that the following methods are normally used to maintain the stock records under the perpetual stock inventory system. So methods which are basically used. Methods used under perpetual stock valuations. And these are the things I think which are not new to us. I think they are familiar to us. So one of the methods that we normally devise most of the organization, or which the organization normally use, we can discuss about first in. We have first out. First in, first out methods. It is normally called FIFO, right? Number two, we normally talk about last in, first out. It is normally called LIFO, right? Number three, we normally discuss about weighted average methods. Weighted average method is basically, it has already been, it was already tested last year. Number 4, we normally have simple average methods. Simple average methods. And then number 5, we normally discuss about a standard. Standard, we normally call it standard price methods. Standard price methods, I can just be able to talk about the standard price method. It is basically, it is normally determined, or it is the price, or the price which you are going to be selling the commodities, the price used to issue stocks, right, is normally determined. It is normally determined at the beginning of the accounting period. At the beginning of accounting period. At the beginning of the accounting period. So basically, when you look on the standard price method, it is normally determined at the beginning of the accounting period, which is very clear in this aspect that at the beginning of the accounting period, we are going to be determining, or we are going to be saying that we are going to be issuing our prices, or we are going to be issuing our products at Kenya shilling, for instance, at 70, right? At 70. So what happens when we find that the purchase price is more than 70? It is going to be affecting our ledger, since already this is determined earlier, and we cannot be able to change during the accounting period. If already we have said that you're going to be issuing our product at 70, then we have to be issuing at 70 regardless of the purchase prices. Now, what about the FIFO? Let me start from here for explanation. And we are saying that the items which are normally, because these methods are basically used to identify how much can we be able to sell our product, or how are we going to be selling our products which already we have them in stock. And in this aspect, we can be able to say that the items which are received first, right? The items which are received first, which are received first, will be issued first. So once we receive an item first, right, it is the one that we are going to be issuing first. That it means basically this method is appropriate when we are dealing with the perishable items, right? Applicable, right, when dealing with perishable items. So it is basically applicable when we are dealing with perishable items. That is why we are discussing about first in first out method. And the reason as to why we are discussing about it in that aspect is because when we look on the flour industry, this is what they normally do. The flours which come first are the ones that are going to be sold first. That is the method of issuing the products. What comes with the LIFO? We normally discuss about the items which are basically received last. The items which are received last are the ones to be issued first. To be issued first, right? I normally give a good example here for hardware. Ukienda hardware waambie, today I need, ukienda for hardware and you ask them, I need to buy a cement, right? They are not going to be telling you that the cement that we have, lazima tutoanishe the wool house or the wool store. No, they are going to be selling the ones that ziko kwa mlango. Kama ni chuma nimeendea pale, watanipia ile chuma imedelivered today. So that it means the item which have already been received first, will be the one to be issued first. Zimekuja tu saa hii. And in this aspect, we are going to be looking on the challenges that we have when we are dealing with the questions of last in, first out. What about the weighted average stock valuation? And in this method of stock valuation, we normally talk about the items which are normally issued based on the weighted average prices of the items existing in the inventory, right? Right. We are saying items are normally issued. The items are normally issued based on the based on the average prices. Based on the average prices, right? Based on the average prices. That is what we are going to be doing with the weighted average method. And that is where we have said weighted average prices of the items. Let me complete by putting it. Prices of items existing in the inventory. Existing in the inventory. So we are going to be calculating average prices. When I'm going to be coming up with a called a ledger card, I have to be teaching you how to compute or how to calculate the average prices. Because every time we are purchasing or issuing every product, it means we have to be updating our balances. It means we have the balances books should also be updated, whether I'm purchasing, whether I'm issuing out. That is why we have to be updating every time we purchase or we sell a commodity. Then we remain with the simple now, right? And when you look at it, it is basically called simple because already it is a simple method. We are looking on a method of stock valuation where the average prices of commodities existing in inventory are used to determine the issue prices, right? So in this case, remember we normally have the prices. We have to be calculating the average prices, right? We also have to be calculating the average prices, all right? Or when we calculate the average prices, it should be the average prices of the existing in inventory. So the prices, this should be, let me talk about, we have to be calculating the average prices per unit of the existing, right? Of the existing inventory. Of the existing inventory. We have to be calculating because already examiner is going to be telling you I have purchased 10,000 units at 50 shillings. So we have to be looking when you are issuing. Like Mary now, you can be able to issue 10,000. You have already purchased 10,000 units. Then Cleophas comes and he purchased 7,000. It means already you have not completed the 10,000. When, for instance, Grace will come and purchase 4,000, you can see you have a deficit of 1,000, right? Grace comes and purchases 4,000. So you cannot sell what you don't have. What I'm using 3,000, what's remaining on my stock is 3,000, right? And when you continue purchasing, before the Grace comes, already to say we purchase another stock of 5,000, then already there are two prices. To corner 50, and to buy for instance 5,000 units at 40. So I have to be calculating 50 plus 40, 50 plus 40. I divide by 2, right? Getting 45. The 45 is the one that I'm going to be using, right? But when you exhaust a given batch of units, then that price per unit is not basically used. So to discuss this, by the way, I wanted to find illustrations so that we can be able to understand how we can be able to sort each method. So wacha tuangalie swali. We have a good question here. Let me, and sijui nani anaanza kutusomea leo. So let us go to the questions. Let us go to the questions. Can I be able to start with the one here? Yes, I know there is one here. And tutapanda tu mpaka 2022, 2021 somewhere. Management accounting. Good. Grace, can you be able to read for us? The question is November 2015, question 3B. Read for us.
Kenna Stores provided the following information in respect of their operations for the month of July 2015. Additional information. One, materials in store at 30th June 2015 were 2,000 units at 50 shillings. On 9th July 2015, part of the materials issued on 5th July 2015 amounting to 200 units were returned. On 15 July 2015, 100 units were returned to Kenna Stores. On 21st July 2015, there was material wastage of 500 units. Returns from from a June 2015 issue of 100 units at 45 shillings was received on 25th July 2015. On 28th July 2015, there was shortage of stock of 20 units. Additional information 7, Kenya Stores uses the first in, first out FIFO method to value its inventory. Required a store ledger's card for Kenya Stores for the month of July 2015.
Thank you. And you can see, the reason is why I normally see it is easy, by the way, to pass management accounting. Imagine umeletewa swali kama hii, and if I can be able to sort it, nimepewa 14 marks. Now, when I'm given a 14-mark question like this, I know I'm remaining with that 6 marks. So that is why I normally look at it easy to teach management accounting, since I can be able to see 100% pass rate. Because already whatever we teach in class, hiyo ndio tu utapata. Utaletewa tu swali the way venye nitafanya hii. And you'll be able to see other questions from this area on how they are being set. So already we have already been told, in additional information number 1, we have opening balances. And I've already been told the materials in stores as at 30 June 2015 were 2,000 units at 550 shillings. Already I know I have opening balances. So nikienda July, date 1, niko na opening balance 2,000 at 50 shillings, right? And then examiner amenipea receipts ni purchases zangu, issue ni sales. I want you to understand that one. So receipts are my purchases, issues are my sales, right? So every time you hear mwalimu using the term issue, it means we have already sold. We have already sold. So every time I talk about receipts, no, we have already purchased. So let us go back to the board, and I know that this link for questions, you have it. The link for question, already we have it. So we are doing November 2015 question here. So you can be able to open the question so that you can be able to flow together. So remember, we have already been told to come up with a store ledger cards, right? We discussed about the store ledger cards. So let me write mine here. Niambiwa nitengeneze store ledger card. Store ledger card. Inakaa namna hii. Very simple. The method that we are going to be using, the device method hapa tunatumia FIFO. So in this case, I have to be recording my days. Very important. Then hapa naandika receipts. So zile vitu nimekuambia ni purchases, hizo ni vitu zinakaa kwa kichwa yako. Examiner ataki kwetu muandikie huku, ati ati sales, hapana. Then hapa mwisho unaandika balances. Unaandika balances namna hiyo. So what do we normally record under the receipts? You normally record units. We normally record cost per unit. And then we normally record amount. Right? Something looking like that. Also on the issue side, you normally record units, cost per unit, and then we normally have amount. Then we have also units and the balances, cost per unit, and also you record amount like that. So already hapa, nimeambiwa the 30th June, which is the closing of June, the month of June. Now, the balances at the end of June, ndio tunafungua nazo. So we are going to be saying on 1st July, on the 1st July, tulikuwa na balances hapa za 2,000 units, right? At 50, getting 100,000. Getting 100,000 there. Getting 100,000. Na hizi matarehe zinaenda in ascending order, by the way. Date 1, 2 namna hiyo. So in this case tunaangalia after date 1, the next transaction will take place ilikuwa tarehe ngapi? Naona naambiwa date 3, right? Date 3 tulinunua. I can see there is a receipt. So hapo nakuja naandika date 3, 3rd, right? So tukanunua 600 units at 60, right? Hapa total yake is at 6,000. At 6,000. When you purchase, tumenunua already. What are also our balances increases, by the way. Balance zetu zina increase mpaka ngapi? Hapo unaniambia already nimepurchase so sita na already niko na 2000 per store. So the total balance zangu ni 2600 na zina value pesa ngapi? Unaniambia zilikuwa za 36000, zilikuwa store za 1000. Ukiadd unapata 136000. Nafikiri hapo tuko pamoja. Umepurchase 600, already in your store ulikuwa na 2000. So ukijumulisha they come to 2600. Then also when you check on the amount, the amount of the goods that were in store are 100,000. The one that you have already purchased is at 6,000. So the total comes to 136,000. So you go to the next day and you look on the next activity that you encountered. So we have date 5. Date 5 naona tulikuwa na issue, tuliuza. Na unajua tunatumia fast in fast out. So date ni 5. So hapo unaniandikia 5th. Unaniambia niliuza. Nitauza zipi? Nitauza hizi 600 ama nitauza 2000? Unaniambia mwalimu tutauza 2000 because we are using the first in goods, right? They are the one to be issued first. So in this case we are going to be selling these ones, right? So hapo unakuja una record on the side of issues. Ule customer alikuja nataka 1600, si ndio? Nataka 1600. Kuna ujanja ingine hapo walimu examiner anatumia, anakupea selling price, the selling price per unit. Wakati unatengeneza storage account hapa tutengeneze tupate profit hapana. Sisi tuna record the movement of goods. So the selling price is not considered when you are issuing the goods. So nakuja hapa nasema natumia hii batch ya 2000. Customer mwenye amekuja nataka 1600. Hizi zinatosha. Si ni ukweli? Then how much are we going to, the issue cost per unit itakuwa ngapi? 50. Because hizi ni za 50. So hapo unakuja na record na ngapi? Na 50. Na record na 50. So inakuwa ngapi? Inakuwa 1600 times 50, you are getting how much? Right? 1600 by 50, you get 80,000. You get 80,000. So already Cleophas ananiambia already nimeuza nikapewa 80. Si ndio? So unajiuliza already nime sell 1600. Balance zangu ni ngapi? Unakuja unachukua 2600 minus zenye umeuza, you remain with 1000. Right? Then what about the balances? Unakuja unaniambia already nishapokea 80. Hizi goods zimebaki kwa store, value yake ni ngapi? Na kwa hivyo unachukua 136 minus 80. How much are you getting? 56,000. 56,000. So inamaanisha wakati na issue na subtract. Wakati na receive na add kwa balances. That is how you have to be checking it. Let us go to date 7. I think date 7 is the next one. Date 7 tulinunua 7. Tulinunua 1,000 units, right? 1,000 units at 70. 1,000 units at 70. Here we are getting 70,000. 70,000. So ukinunua tumesema you add on the side of the balances. Hapa ni 2K. Right? What about the total amount? Unachukua 70,000 plus 56, getting 126,000. Getting 126,000. After date 7 tunaenda tarehe ngapi? Naona kwa additional information number 2. Tumeambiwa on 9 July 2015, part of the material issued on 5th, hizi tuliuza, were returned. So return inwards tuna record wapi? Return inwards tuna receive tu kama receipts. So hapo unakuja unaniambia on 9 na record my receipts. Naambiwa walirudisha 200, but hapa naandika return. Right? Tuliambiwa ni 200 units were returned. So tulikuwa tumemuuzia na pesa ngapi? Hiyo tu ndio tuna receive nayo. Tulikuwa tumemuuzia na 50. So hapo unakuja bado na receive na 50. Right? This comes to 10,000. Si wakireturn inamaanisha tulikuwa tumewauzia goods zenye wako wameorder ama zilikuwa excess wakaturudishia. So unapeleka store, you just add 2200, right? And then here we get 136,000. 136,000. I think we are okay up to that point. I think we are moving very okay. Are we together to that point?
Yes.
Good. I think we are together to that point. Now let us go to the next day. After date 9, tunaenda tarehe ngapi? After date 9, I can see as per the question we are being told that the next transaction that took place ilikuwa date 12. Right? On 12 July, we were able to issue 400 units. Good. So hapo nakuja niambia date 12. Tuliuza 400. So hapo already tunataka 400. First in first out method, right? So hapa tuliuza 1600. Zikabaki 400. So already we are in position of exhausting the first batch. So we are selling at 50, right? So 4,000 by 5, is it 20,000? I think it should be 20,000. So wakati unauza you reduce. So hapa ni 1800. 20 you reduce here and you get 116,000. 116,000. That is on 12. That is on 12. The next activity I can see, note number 3, we have been told on July 2015, on 15th July 2015, 100 units were returned to Kenya stores. Easy tu nimeuza. So hapo unaniambia on 15th kulikuwa return inward, tukarudisha bado 100 walirudisha at 50. This is 5,000. Kimbiza store, you just add, get in 1900, right? 5,000 here, 121. 121,000. Let us go to the next activity day. And the next activity day, I can see on date 18. On 18, right? On 18, we were able to purchase 2,400 units. 2,400 units, right? 2,400 units at 80. 2,400 times 80. How much do you normally get? We normally get 182,000, right? 182,000. Hapo lazima sasa tuende calculator. 24 plus 19, we normally get 43, right? I know I'm correct. Then when I look on 192 here, we normally get 313. Is it 313? It should be like that. 313,000. 182,000 plus 121,000, we should be getting 313,000. 313,000. Then from there, that is date 18, right? Tunaangalia date ingine. I can see on 20th, kulikuwa na activity, we sold on 20th. So on 20th, we sell ngapi? Already on 20th, we were able to sell 1,200. Lakini zile goods niko nazo kwa store so far, the first goods, because hizi nime-exhaust. Mwanafunzi anaweza niuliza hizi tume-exhaust aje? They were the first in, this 16 plus 400, getting 2,000, hizo zimeisha. But ule customer amekuja on 20th, anataka goods ngapi? 1,200. So already nitauza hizi kwanza, nikuja hapa I say, let me sell 600 at 60, you record at 6,000. Sindio? Then the balance of 600 tunachukua kwa the next batch here, right? Kwa hii batch, 600 by 70, getting 42,000. Already tumemalizana na customer, tumemuuzia goods zake zenye alikuwa anataka 1,200 na tukapokea pesa ngapi? 78,000. Tukapokea 78,000. So twende pale to adjust our balances. 43 minus 12. 43 minus 12. How much are we getting? We normally get 3,100. Then 313 minus 78. 313 minus 78. How much is this? Let me take my calculator. I could struggle a lot.
235.
How much?
35,000.
35,000. 135.
235.
235,000. Thank you. 235,000. To talk on 20th, the next day. The next day was on 21st, date 4. Sorry, additional information 4. On 21st July 2015, there was material wastage. Out of these goods to me hold up, 500 zimeharibika. How do you normally record wastage? Nakuja hapa na kuambia on 21st, when we want to record the wastage, unazirecord kama una issue, because we want to subtract them. And the way we can be able to subtract, a unit from our balances is by issuing. So nakuja hapa nasema ni 500. Right? 500. Sindio? Tulifika wapi? Unakuja unaniambia mwalimu tumeissue 600 from 1,000. Sasa kutoka hii batch iko hapa kuna 400 zimeharibika. Right? Kwa hii batch sasa. Si already umeissue so 6, kukabaki 400. So tunaissue hiyo 400 at 70. Hiyo comes to 28,000. Then kuna ingine hapa, hizi zilirudishwa, 100 zimeharibika also. So nakuja nasema 100 by 50 getting 5,000. This comes to the 500 of our wastage, and then this turns to that 3,000. 33,000 like that. So wewe subtract kutoka kwa store, uniambie that 100 minus 500. We are getting 26, right? We are getting 2600. Good. Hapa ni 2600. Then 235 minus 33,000. How much do you normally get? I can see we are getting 202. I know tuko pamoja mpaka that point. That was on 21st. This transaction took place. Memalizana nayo namna hiyo. Memalizana nayo namna hiyo. Let us move to the next transaction. I can see on 25th, right? 25th. Kuna goods zenye zilikuwa zime on 25th iko kwa additional information. I can see we are being told on note number 5, returns for from a June 2015 issue of 100 units at 45 were received on 25th July. So goods zenye tulikuwa tumeissue last month zimeletwa hii mwezi. So remember already hapa we are dealing with new batch coming in of 100 units which were returned for the previous which were issued for the previous month, turns to 4,500. Ibiza store utakuwa hapa na 2,700, then hapa tutakuwa na 206,500. 206,500, right? 206,500. 206,500. That is after 25th. The next date that we have took on a date 28. And 28 we are being told, right? 28 is not number 6. On 28 July 2015, there was a shortage of stock of 20 units. Tunaitoa hapa. Remember hapo ulibakisha ngapi? Hapa tuliissue ni hapa. Ni hapa by the way. Hapa ndio tumetoa, right? Hapa ndio tumetoa 100, tukabaki na 100. So already on 28 tunaambiwa kuna shortage, tunaitoa hapo. So tunasema ni ya 20. So the price ni ngapi yenye tunatumia? 50. Hapo unapata 1,000. Toanisha pale, you are going to be getting 2680. And then hapa we are going to be remaining with 205,500. 205,500. That is our shortage. Let us go to 29. 29, customer amekuja pale anataka, tunamuuzia 600 units, right? 600 units. But remember hapa kwa hii batch, because we are using fast in fast out, kwa hii batch already umebakisha how much? Hapa umebakisha 80. Because already ni hii 100 na 20, hapa kumebaki 80. So unaniambia yeye anataka 600, but first nitampea 80 by 50, right? Getting 4,000. Right? Then from there, we come and so we issue, because we have not satisfied the customer. We're also going to be giving him 100 the next batch by 50, getting 5,000. Right? Then there is a balance, because already all of this is already exhausted. So we are on the batch for date 18. So this batch already, how much is remaining to satisfy the customer with 600 units? So it says 600 minus 180, getting 420. Tunaitoa hapa. So nasema hapo naweza toa 420. So 420 by 80. So 420 by 80. We are getting 33,600. 33,600. Huyu mtu umempea goods zake 600 zenye alikuwa anahitaji, na also tumepokea pesa ngapi? 33,600 plus 9,000. Unapata 42,600. Peleka store, subtract. So hapo uta remain at 2080, right? Then 202, 205,500 minus my answer now. I'm going to be getting 162,900. 162,900. 162,900. So tunaenda date ya mwisho. Date ya mwisho hapa ni kuissue now. Date ya mwisho hapa we are going to be issuing now. It is on 31st. That first customer amekuja pia anataka 200 units. 200 units. I think my board is visible to that point. 200. So 200 itatoka wapi? Hapa tu tumetoa only 420. So is the only place we can be able to subtract. We can also be able to issue 200 units by 80. So this turns to 16,000. right? So go to store and do deductions. You're going to be remaining with 1880, right? And then you take 162,900 minus 16,000, right? You're going to be remaining with how much? 146,900. 146,900. 146,900. So to end on the month of August, because this is a store ledger card for the month of July, the opening balance is also the 1880. Then the total amount is 146,900. To determine whether I'm correct, you normally do your closing. Nakujanga pale kando naambia examiner, mimi najua kujipanga. Let me calculate my closing stock, right? The closing stock. So I have to be checking on, hii ndio batch najua already, nimeitoa vitu lakini haijaisha hii. So unakuja hapo nasema 2400, tumetoa how much? Unakuja hapo unaangalia 80. 82 umetoa 420 minus 420 na pia ukatoa ngapi? Ukatoa 200. So it remain 1780. Then you multiply by 80. How much are we getting? Times 80. Unakuja unamwambia hapa nimepata 142,400. 142,400. The other units remaining on my ledger ni hizi tu peke yake. 100. You multiply by 45, getting 4,500. Hii ni kujua kama nimeshika ile ama kuna errors nimefanya. Nikiadd my units hapa zitakuja 1880 units. Nikifanya hapa nichukue 142,400 plus 4,500, I'm getting 146,900. That is the only way I can be able to determine nimepata my score ledger card correct. That is the only way you can be able to determine that. Any question? Any question up to that point? Any question? Any question? Very good. If we are satisfied, nataka tuende kwa the second method. That is how you normally do FIFO. To be able to understand it further, repeat my question. Let us do other question. Kuna swali mingi sana ziko pale za stock valuations. Nataka tu nikifanya hii method hata nikifanya, for instance, niende saizi nifanye swali ingine ya LIFO walitest in 2020. You can come and you take this question, you do it with LIFO, and you should be getting the same figures here. You're supposed to be getting 1880, 146,900. So the assignments zenye nitapeana ni kurudia ile swali yenye sijafanya na another method. You can use the other method, right, to do it. But the only difference is, let me not contradict you in this point. Amount might be different, but the units will always vary regardless of the method that you are using. Because nimejua vizuri, the amount inaweza vary based on the method you are using. Because kama ni LIFO, you are using from downwards upward. So the amount might not be the same, but the units will always tally. Whether I'm using weighted, whether I'm using standard, whether I'm using simple, the units should be the same. So hii nikifanya tu, wewe unaweza wakati sasa tukimaliza class, tomorrow you can be able to do your practice, use the same question that I have done November 2015, repeat it using a different method. I just want us to do another question for another method. Right, I just want to do another method using a different question, because all the questions now, they are many for this area. But then tumekuwa, they have not been testing this area for a while, but after they change the syllabus, they have already started testing it openly. So just be able to understand it well. Number two, we have talked about last in, first out. It's normally called LIFO. It's normally called LIFO. And we have already said, when we are dealing with LIFO, it is very important to understand that the differences with FIFO will always come when we are issuing the commodities only. Right? When we are issuing the commodities, then it is going to be changing the way we are doing our question. To understand it further, I just want us to do a question, right? I just want us to do a question. And the question that we're going to be doing basically was tested on 2020. Wakati tulikuwa na mashida mingi. So let us go there. So let me share my question. So let us go to 2020 November. We only had one sitting for that year. We know the challenges we encountered during that period. 2020. I was almost clicking financial management. It's very interesting also. I hope you enjoy this semester. Now, the question is in front of us. Mola, you can read for us. Mola, you can read. Someone else?
Majewa Limited is manufacturing firm operating in textile industry. The company recorded the following transaction in relation to product BT during the month of January 2020. We have a date, purchases and sales. We have additional information. The operating inventory of product BT on 1st January 2020 comprised of 9,500 units purchased at a cost of 135 shillings per unit. On 9th January 2020, the company reported a shortage of 300 units. On 19th January 2020, 600 units of the units sold on January 2020 were returned by the customer. Required a storage account for the month of January 2020 using FIFO method of inventory valuation, and then the value of the closing stock.
Good. You can see now the examiner has already told you to do closing stocks. So what am I going to be doing? Very simple. You just be able to determine, you just be able to check on there is one trick which the examiner has already used in this question. And you can see now the aspect of issuing. When you are looking on issuing, the examiner has already given us what? The examiner has given you sales, selling prices, right? So in this case, the unit selling price, I'm not going to be using it to prepare a storage account. And that is one of the tricks I was telling you. Once you use it, you fail terribly. Now, it is good when we have this question. It is also for FIFO, but I'm going to be using LIFO to do it. I'm expecting that we are going to be understanding it well. Now, we are being told that a storage account for the month of January 2020 using the first in first out method of inventory valuation. So in this case, let me go back to the boards. I think there must be someone who is suffering with network issues. So here we are going to be having this. We have receipts, right? We have issue. Let me distance it somewhere here. We have issues, and then we have balances here. The format always look the same. So we are going to be having units. cost per unit. We have amounts, right? We have units, cost per unit, and then we have amounts. We have units, cost per unit. We have amount. Good. So do the same way we have done the other methods. So we are going to be starting by looking on the openings. So the opening balances, we have been told in additional information number 1. Examiner has already told us that the opening inventory of product BT on 1st January 2020, it is comprised of 9,500 units. So here it just talked about the 1st January. We have been told we have how many units? We are being given 9,500 units purchased at a cost of 135. So you just record them here, 9,500 at 135. So how much am I getting here? 9,500 times 135, getting 12,82,500. 12,82,500. So the next activity was when? Right? The next activity took place on, let me check on my the data given by the examiner. We are also being told on 1st January again, there are some of the goods that we were able to purchase. So we purchased 12,000 units. So just record them here, 12,000 units. We purchased them at 150. So 12,000 times 150. We are getting 1.8 million. Take it to store, and we are going to be adding the units. So let me add the amount first, because they are the one that I have in my calculator. So 12,82,500, right? Getting 30,82, right? 30,82,500, good. Then what about the units? 12,000 plus 9,500, getting 21,500. 21,500. The next activity day, right? I can see us on 3rd. On 3rd, right? What did we do on 3rd? We were also able to purchase. So how much did we purchase? We purchased 8,000 units, right? At how much? 160. So 8,000 by 160, getting 12,80,000. Take them to the store. We are going to be having 29,500. 29,500, right? What about the total amount? We are going to be having 1280 plus 30,82,500, getting 43,62. 43,62,500. 43,62,500. The next day was date 7. So what happened on 7th? We were able to purchase or to sell. We sold 12,000 units. But remember, the question that you are doing, you are using lead for last in. So when you look at it, what we are being required right now is 12,000. But what the last unit that I have is 8,000. I issue them first. So I will be able to issue 8,000 at 160, getting 12,80,000. Right? How much are you remaining to get at 12,000? You say 4,000. You go to the next batch up, which is 12,000. You sell 4,000 now. 4,000 at 150. So I say 4,000 by 150, we are getting 600,000. 600,000. The total here is 1,880. I know that is correct. Then here we have 12,000. So go to your balances and you subtract the unit that you have already issued. So 29,500 minus 12,000, you are getting 17,500. What about the total amount? I say 43,62,500 minus 18,80,000. We are getting 24,82. 24,82,500. But already I can see on note number 2, on the additional information aspect, we have been told on 9 January 2020, the company reported a shortage of 300. And then we say, how do you normally record the shortages? we say we can only be able to record them on the side of issue. We are being told 300 units coming from where? From 12,000 batch, right? This is the only batch that we have at 150. 300 by this, we are getting 45,000. Get your subtractions here, 17,200. So 2482,500, 2482,500 minus 45,000. We are getting 2437,500. 2437,500. I think those figures are correct if you are following. Now, after 9, I can see we have date. I see here we were able to skip one date. Someone has not told me. So let me also wrap a 0 from your end. When I look on my store ledger card, I can see we have date 8. Date 8. Right? 8. So on 8, when I look on 8, we were able to purchase 10,000 at 155, getting 50,000. Take them to the store. We are getting 27,500. Right? 15,000 plus 2482,500, getting 40,32. 40,32,500. 40,32,500. Let us shift our gears to date number 9. Date 9, sorry. On 9, we said we issued 300, and 300 is going to be deducted from the last batch for date 8. So it is 300 by 155. So 300 by 155, getting 46,500. Right, subtract here, we are going to be getting 27,200. Then we take 32,500 minus answer, getting 39,86,000. I think that is correct. After date 9, we can go to date 13. Because I can see, yes, date 13. How much we were able to sell 13. How many units? Straight away, on 13, we required 5,000. We can just be able to pick them from here because the apartment were 2 only 300. So 5,000 by 155. So how much are we getting? 5,000 by 155, getting 775,000. Subtract from your ledgers, from your balances. So 5,000 here, we are getting 22,200. When you look on that 986,000 minus my answer, I'm getting 32,11. I know you're following. Now, after the 13, let us go to 17. 17 also we were able to sell. How much were we supposed to sell? The sales were 8,000. But already here, we have subtracted 5,300. So 10,000 minus 5,300, getting 47. We issue the last ones. 4,700 by 155. Times 155, getting 728,500, right? Now, we have not already, or we have not attained 8,000. So where are we going to be getting the balance? I can see on the side of 160 here, right? On the side of 160, we sold everything. Now we go to the 12,000 batch. We were able to sell only 4,000. So the balance is how much? 8,000 there. So what is our balance to attain 8,000? You tell me it's that 300. Getting it from where? From the 12,000 batch at 150. So that 300 by 150, getting 495,000. 495,000. Here we are getting 8,000. Then we have 495,000 plus 728. 728,500. Here we are getting 1223. 1223,500. Now let us do our deductions. 22,200 minus 8,000. 22,200, right? Minus 8,000, getting 14,200. Then we have 32,11. 32,11,000 minus 1223,500. getting 1987, 500, 1987, 500. I think we are moving well. Now let's shift our gears after 17. I can see we have note number 3, where we are being told on 19 January 2020, 600 units of the units sold on 17 2020 were returned by the customer. The one that we have sold right now is at 300. So that is on which dates? We are discussing about date 19. We are able to receive a return of 600 units. Is a return at 150. So 600 by 150, getting 80,000. Take it to the store. So it will be 14,800, right? How much is the total? 90,000 plus 1987, 500, getting 2077. 2077, 500. From there, we purchased another unit on 20th. On 20th, we were able to purchase how much? 12,000. 12,000 units at 140. So 12,000 by 140, we are getting 1680,000. The liquor store, increase your units, yet 26,800. Then here we add 2077, 500, getting that 757, 500. After 20th, we go to 23rd. Just move very quickly. 23rd, we were able to receive how many units? We were able to purchase. I can see we are being told is 7,000 by 152.5. So it will be 7,000 by 152.5. We are getting 1067. 1067, 500. Take them to store. We are getting how much? Yes, 33,800. Right. Then we have plus 3757, 500. We are getting 48,25,000. 48,25,000. That is on 23rd. Then we have on 25th. We were able to sell 25th. Hapa tuna issue sasa. So how many units are we issuing? I can see 11,000, but the last thing we have 7,000. So first let us issue 7,000 by 152.5, getting 1067, 500, right? Then the balance is 4,000. I can just be able to take from this batch of 12,000. So it is 4,000, right, by 140. So 4,000 by 140, we are getting 560, right? So this is 11,000. How much it is? Plus 1067, 500, getting 1627, 500. So how much is the balance? I can see 22,800. Then what on the other side? Minus 48,25,000. Getting 31,97, 500. After that one, I can see we have another date that we were able to issue. Day 27. On 27th, I can see also the customer demanded 10,000 units. Now, what you are supposed to be asking yourself, what is the balance here? 8,000, right? Yes, 8,000, because already you have issued 4,000. 8,000 remaining by 140. So 8,000 by 140 is how much? 20,000. Right? The balance now comes on the 600 parts. So the 600 also we issue on this point because they are the last thing. 600 by 150, getting 90,000. Who customer amebakisha ngapi? Anataka 10,000. Tumempay the 600. So 10,000 minus 8,600. Anatudai 1,400, right? Now in this case, tukiangalia hii 10,000 tuliissue yote ndio hii. So hapo huwezi niambie tumebakisha. Unaruka hapa hii tuliissue yote. Haya, twende hapo kwa 12,000. Kumebakia ngapi? Uliissue 4,000 na ukaissue 33. Kulibaki ngapi? Right? That is the question now. 4,033. How many is remaining? 4,000 plus 33 minus 12,000. So tunaweza toa 1,400 yetu hapo because kumebaki 47. So tukitoa 1,400 by 150. 1,400 by 150, we are getting to 10,000. So what is the balance? So very simple. Here the customer demanded 10,000 tumepata. How much is this? So this is 300,000 plus 1120. Unapata 1420,000. So 10,000 here, we remain with 12,800. I think that is correct. Then here, we are going to be remaining with how much? Minus 31,97,500. 1,777,500. Right, I think it is correct. 1,777,000. Then on that first huyu jamaa anataka ngapi? 200 bado. So unampea 200. So 200 bado tunatoa hapa. Hapa ilikuwa imebaki 47, right? 47 to compare 14. 47 minus 14 33. Toa 200 hapo. Tabaki na 31 by 150. Right? 200 by 150 getting 30,000. So ukipeleka huku, when you subtract, you're going to be getting 12,600. Is the balance, right? Then on the other side, we subtract 1777,500. We get 1747. 1747,500. Let us look on the closing stock. Closing stock. So when you look on the closing stock, hapa tumesema kumebaki how much? Kumebaki 3,100. Because ilikuwa 4,700 minus 4,700 minus 1,400 minus 200, remaining at 100 by 150, getting 465,000. Now the other balance that is remaining here, the 9,500 times 135, getting how much? 1282, sorry, 500. So what are the totals? I can see the units are turning. Already here we have 12,600. What about the amount? Right, 465 plus 1282. 1282, 500. Getting 1747,500. That is how you normally do the closing stock. Lazima ukuwe una master ni wapi nimemaliza, ni wapi nimeissue, ni zipi zimebaki wapi. You're getting 1747,500. That is what you are able to get here. So the closing balances should be tallying with your balances at the end of the day, at the end of the month, at the end of the month. That is how the closing stock is normally done. The closing stock is normally done. Any question? Any question? Any question? Very good. So if we don't have any other question, can we be able to proceed to our next stock valuation method? Yes, let us shift now to the weighted. Let us go to the weighted. Let's go to the weighted. The weighted average method. Number 3, we are talking about weighted average. The weighted average method, right? There is a question somewhere, maybe April 2022 for the weighted. Let me check whether it is April 2022. Let me first shift my gears to that point.
Mila, simu yako inalia ama?
Can you imagine with only 2023, you can be able to finish your CPA? 2023 only. Management. Let me check what it is here. A minute, let us check whether the question is. The question is on August 2022, question number 1B, and the examiner is asking question number 1A. Explain the following terms as used in inventory management system: formats, perpetual inventory system, periodic inventory system. And already I'll be able to share some notes for that, so that you can be able to answer that question well. We have question 1B. Someone to read for us. Someone, please. Mary, you are unmuted. Can you read? Mary? Mary amepotea. Go on.
The following information relates to store receipts and the issue of material R in a small manufacturing enterprise for the month of April 2022. The opening event, we have the details. The opening inventory 4,000 units at 100 shillings per unit. There were 3,000 units issued. Purchased 9,000 units at 120 per unit. That 200 units issued. There were returns to the store, 2,000 units from the issue of 4th April. Purchased 4,800 units at 130 per unit. There were returns to supply of 400 units out of the quantity received on 5th April 2022. Purchased 2,000 units at 140 shillings. And then we have issue of 4,200 units. There were purchases of 2,400 units at 150 per unit. And then there were issue of 5,600 units on 30th. It is the company's policy to use the weighted average method when valuing the materials issued. So we have the required, we have the store ledger account for the month of April 2022.
Good. You can see the question is for 10 marks. So let us see what we are supposed to be doing for that question. Because I'm expecting it to be in your exams this semester. That is what we are anticipating to have. Right. Now, in this case, we have been told that the opening inventory of 4,000 units, we have the opening inventory for the first day of April. So let us go back to our board and see what are we supposed to do. What are we supposed to do? Good. Now, when I look at it, we have been required to come up with a store ledger card using the weighted average method. The first activity of the day was the opening inventory. So the 1st April, we were having 4,000 units. Now collect upper balances, 4,000 at 100, getting 400,000. Getting 400,000. Then we have date 4, being told we were able to issue 3,000 units. So 4th April, we were able to issue what we have here, right? So the examiner is asking what? 300, sorry. So 300, you can see we have 4,000. So that you can be able to issue 3,000, sorry, at 100, getting 300,000. Once you subtract here, we are getting 1,000. And then at the end of the day here, the balance is 100,000. So on the weighted average method, every time you are calculating your balances, you need to be determining the cost per unit. So if this is 100,000 divided by the number of units, we are going to be getting 100, the cost per unit. This divided by this, right? Sorry. So when you divide, what are we going to be getting? We're going to be getting 100. So every time we are going to be issuing, we issue at the cost per unit that you have already calculated under the cost per unit on the side of the balances. So let us shift our gears to date 5. 9,000 units at 120 per unit. So here we are discussing on 5th. So we have been told on 5th we purchased 9,000 units. So we purchased at 120. At 120. How much are we getting here? Right, 9,000 by 120, get it 1080. 1080,000. Take them to store. Once you had, here you're getting 10, how much it is? 10,000, sorry. Then the balances on the other side of the balances will be how much? 1180. When I take 1180,000, I divide by 10,000. I'm getting 118. I'm getting 118. Then on 9th, we were able to issue that 200. This one you don't follow any procedure, by the way. Just issue your units. That 200, but we issue at the cost per unit that you have already calculated. The last one that you have calculated, we calculated 118. So that 200 times that 200. Here we are getting 337, 377, 600. Then you subtract. When you issue, you subtract. So 10,000 minus that 200, getting 6,800. Then we have 1180,000 minus 377, 600, getting 802, 400. You divide by 6,800, getting 118. Let us continue. Then from there, we go to the 12th, returns to stores of 2,000 units, which were issued on 4th, are very good. So the date was on 12th. So we said they were able to return how many units? 2,000 units. 2,000 units of ours is the return. So they are the ones. The cost per unit is 100. So this is 200,000. Take it to store. It will be 2,000 here becomes 800. What about the total amount? It will come to 1002, 400. Then you divide by 8,800. So 1002, 400. You divide by 8,800. We are getting equivalent to 114. Something like that, 114. Then from there, we go to date 15, purchase 4,800 units at 130, right? So that is on 15th. So on 15, we were able to purchase how much? 4,800 by 130. 4,800 by 130, getting 624,000. Take it to store, right? So 8,800 plus 4,800, getting 13,600, right? 1,002, 400 plus my 624,000. We are getting 1626, 400 divided by 13,600. We are getting 120 equivalent to 120. Then from there, we go to date 18, return to supplier 400 units out of the quantity received on 5th April 2022. So when you look at it, it is on 18. So on 18, we were able to return how much? The return was 400 units. So once we are making a return, right, we issue, because it's the return outward, because it's a return which we are taking it to supplier, we are being told it is how much? 400 units at 120, right? So 400 times 120, getting 48,000. So here we are getting 13,200, right? 162, 6,400 divided by 13,200, getting 123. Have I done correctly? No. 1626, 400 minus 48,000. We are getting 1578, 400, right? Then we divide by 13,200, getting 120 equivalent. Then from there, we go to date 25th. We go on 25th. You can see how this simple it is. On 25th, purchase 2,000 units at 140, right? So 2,000 times 140, getting 280,000. Take it to store. This you are getting 15,200. Then we have plus 1578, 400. Getting 1858, divide by 15,200, getting 122. If we are following, after 25th, we go to 28th. What is happening on 28th? We are being told there was issue of 4,200 units. 4,200 units. How much are we issuing with? 122, right? 122. So 122 times 4,200, we are getting 512. 512, 400. Then you take it to store. So minus 1858, 400. We are getting 1346,000. Right? Then the other one will be 15,200 minus 4,200, getting 11,000 here. So 1346,000 divided by my answer, right? 1346, we divide by what? 11,000. I'm getting 122 again. Then after 28, 29 we were able to purchase. 29 we were able to purchase 2,400. We are being given 2,400 units, right? 2,400 units by 150. 2,400 units by 150, getting 360,000. Take it to store. So in this case, it will be 2,400 plus 11,000, getting 13,400, right? What about the unit 1346? 1346,000, right? Plus 360, getting 1706. 1706,000. We divide by 13,400. We are getting 127. Then after 29, we are being told on 30th. On 30th, we were able to issue 5,600. As long as you na stock, hata uangaliangi, overweighted uangalii, watu tunaissue na 127. Tuangalie eti ni wapi na wapi hapana. Hiyo una issue tu direct times 127. Hii ni 711,200. 711,200. Then you take to your store, do your deduction, 1706,000 minus my answer, getting 994,800 there, 13,400 minus 5,600, getting 7,800 units. So 994,800 divided by 7,800, getting 128, equivalent to that. Hiyo swali imeisha. Imagine uko na already 10 marks. Naona hii rahisi sana. Kuna 10 marks. So as long as sisi tuko na stock, hapa tuangaliangi eti last past hapana. Hapa ni kuenda. Hapa ni kusonga sana. Now I just want us to go straight and do simple average method unless there is any question. Simple average method. Simple average method. Do we have any question? Any questions so far? Any question? Any questions so far in regards to what we are doing? Because the next thing that we are supposed to be doing here, and I'm going to be using the same illustration for the April 2022, is to calculate the last method because the standard mimi napeana assignment. So hapa nataka kufanya simple na inakuanga rahisi tu venye inatamukwa. Simple average. Simple average method. Na hii iko na kutumia kidogo. We normally, the simple average method, tunatumia a concept of FIFO. Tunatumianga ka concept kidogo hapa ka FIFO. We normally borrow something from FIFO. So how do we normally do it? We are going to be using the same criteria or the same method, the same question, but to borrow something from FIFO. We borrow something from FIFO. Now, in this case, we are using the same illustration for 2022 April. So in this case, we said the first date of April, tulikuwa na 4,000 units at 100. Tukapata hapa 400,000. Right? I think it was like that. Then when you go to the second activity, which was on the 4th. Is it on the 4th? Correct. So the 4th, we were able to issue how much? 300. And we said in the average, simple average method, the cost per unit, the prices of commodities which is existing in the inventory, tunazi calculate averages. In this case, tuko na only one price cost per unit. So hakuna venye tutaifanyia average because ukichukua 100 divided by 1, utapata 100. So in this case, when you are issuing here, tunachukua tu 3,000, tuna issue na 100, right? Getting still 300,000. Ukitoanisha hapo unabaki na 1,000, right? Na hapo unabaki na 100,000. Haya. After 4th, let us go to date number 5. On 5th, we were able to purchase something. We purchased 9,000 by 120. 9,000 by 120 is how much? 9,000 by 120. Getting 10,80,000. So Pelek on the store, the concept is the same, 10,000 here. What about the balances? Plus 100,000. Getting 1180. Now after 5th, we go to date 9, we were able to issue. So every time we issue, we calculate the cost per unit. So how many units we were supposed to issue? We were supposed to issue that 200, right? Remember now, here there is 100 which is remaining. Sorry, 1,000 units, right? So because we have not exhausted this 4,000, still the cost per unit becomes relevant. So when I'm calculating the cost per unit that I'm going to be issuing that 200 units with, because I think we are issuing that 200. Unakuja hapo unaangalia, this one I have not exhausted. Unakuja unachukua 100, the other cost per unit ni 120 plus 120. You divide by 2, getting 110. Hiyo ndio tunaissue nayo hapa 110. 110, right? the cost per unit. So unasema that 200 times 110. Unapata 352,000. Tuanisha hapa 10,000, right? Minus that 200, getting 6,800, right? Ukituanisha pale 1180,000 minus 352,000, we are getting 828,000. 828,000. That was on 9th. Let us go on 12th. 12th are some of the goods which were returned, which we sold. So we have been told the goods that we were able to sell on 4th, these ones, right? Hii zilirudishwa. So 2K by 100, right? 2K by 100. How much are we getting? 200,000. 200,000. Sindio? So in this case, ukipeleka store, we are going to be having 8,800. Right? Uki add up at 200,000, we are getting 1028. 1028,000. Now from there, remember these are our returns. Sorry. Now from 12, we have date 15. Purchase 4,800 at 130. 15. We purchased how much? We have said we purchased 4,800. 4,800 by 130. A minute, please. Thank you. 4,800 by 130 is how much? 4,800 by 130. Getting 624,000. Thank you. 624,000. Take them to store. 4,800 plus 8,800. Getting 13,600. Right? So 1028,000 plus 624,000, which is 1652. 1652,000. 1652,000. Now from there, we shift our gears to date number 18. They are returned to supplier, date 18. We were returning 400, it's just like we are issuing. So in this case, because we are issuing, we have to be looking on the prices of commodity which is existing on the ledger. Hii tusha exhaust. Kwa nini? Hapa tumeissue already 3,000, ukabaki 1,000. Consider when you are issuing that 200, sindio? 2,200 tukatoa hapa. Hapa ndio kuna balance. So we consider this one. A price of a return is not, the price of a return is not considered necessary when you are doing the cost, the average cost per unit, because already we normally assume this one as he already tusha calculate ama tusha ifanyia average. So already because it is the price for a return, you don't use it to calculate the cost per unit again, apana. All the returns, once you record with these average prices, you don't use an average to calculate an average. So even the equal. So in this case, we just factor this one and this one. Here to Turkey, because already we assume to make calculate here average. To calculate here. So unachukua tu 120 plus 130 divide by 2. So 250 divided by 2 getting 125. So 125 times 400 getting 50,000. Tuanisha hapa 400 get 13,200. Twende hapa 1652,000, right? Minus my answer getting 1602. 1602,000. After 18 to date 25th, purchase 2,000 by 140. 25th, we purchase 2,000 by 140, right? 2,000 by 140. We said it is 280,000, I think. 280,000. Take it to store, 15,200, right? 1602 plus 280,000. Getting 1882. Shift your gears after 25th, we go to 28. We were able to issue 42. 28 we issued 4200, but if the issue kutoka wapi? Kuna balance imebaki hapa. Don't forget, hapa kuna balance. So it means we factor 120, we factor 130, we factor 140, divide it by 3. So 120 plus 130 plus 140, divide by 3, get 130. So here it is 130. So 4200 by 130, getting 546,000. Subtract here. So it means 15,200 minus 4,200. We are getting 11,000 here. Then 1882,000, right? Minus 546,000. Getting 1336. Good. After 28, we go to 29. What happened on 29? We have been told on 29 we purchased 2,400 by 150. By 150. 2,400 by 150. You get 360,000. Right? 360,000. Take it to the store. 24, we are getting 13,400, right? So plus 1336, getting 1696. 1696,000. Then we have 30th, issued 5,600. We are able to issue 5,600, right? So when you check on 5,600, look on the batch which you have not exhausted. I think this one we have already exhausted. Why? Because already we factored some units from it, 2,200, because we took 1,000 here. So it was 2,200. So 9,000 minus 2,200, right? Also we took 400. And also we look on 4,200. It is already in existence. Already 2,200 remaining here. 2,200 units, they are remaining also. So how much are we going to be issuing to get the average prices here? I'm going to be taking 120. I'm going to be taking that 120 because we have not already, or we are yet to exhaust 9,000. So we take 120 plus 130 plus 140 plus 150. Right? Then we divide by how much? We divide by 4. So it is 120 plus 130 plus 140 plus 150. Divide by 4, getting 135. So what times 5,600? We get 756. 756. Go to the balances, do your deduction. 13,400 minus 5,600. You are getting 78. On the side of balances, 1696,000 minus 756,000. We are getting 940. 940,000. 940,000. 940. That is how we normally do the question of the simple average method. I know that you have already understood. When you look on the standard, because I said the standard price method, which I want to give as an assignment. Standard price method. Utafanya the same way we have done this one, but on the side of issue, right? Hapo issue, every time you are issuing, let us issue at a standard price that already we are assuming. Let us assume our standard price. Assume our standard price is Kenya shillings 150. Every time you are issuing here, utaenda issue na 150. But the question will do the same. You just flow the same way, but when you are issuing, just issue with 150. 150. That will mark our end of our class today. But when we meet tomorrow at 7:30, we are going to be doing inventory management. We are going to be doing inventory management tomorrow. Any question? Any question? Any question? Any question? And if we don't have any other question, let us stop at that point. So that I think there are students who are telling me they have another class. I just also be able to announce that sisi tutaanza FM on Tuesday for those who are doing it under me. So on Tuesday we shall be able to commence FM class. Interesting. We shall be able to enjoy a lot. And also this week we are following our timetable. The taxation will be also start. I will be able to start taxation this week. So we are going to now. We are not going to be having any interchange for the unit that we are doing. So tomorrow we do MA. Tuesday we'll be able to do our FM as we soldier on. But the most important is that I need each and every one of us to just commit yourself to be able to understand, listen, and be able to do your part for the papers which I'm tutoring you, by the way, because I also need you to pass. Mr. kufunza mtu mahali pamoja 2 semesters. No, we are not going to be doing that business. So tunajua tu ni once tunapitisha namna hiyo. So siwaje ni wish good night. Right? Acha mimi nisimamie hapo.